Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So the U.S. did not have a stellar April jobs report. It added fewer jobs than expected. That somewhat weak jobs report actually was received somewhat well because the market believed that the Fed is now going to cut in September and perhaps two times. Those expectations of the Fed being a little more accommodative were a shift from just a few weeks ago. In the US credit spread, bond market, spreads are historically low right now. Let's talk about the implications of that historically. So on the chart here, we have the monthly job creation in America. For the month of April, there were 175,000 jobs added. That is lower than the expected number. The consensus expectations were expecting 240,000 new jobs, so less jobs were added than expected. The unemployment rate came in at 3.9%. That is 0.1% above the previous measure of 3.8%. And most estimates were expecting that unemployment rate to remain at 3.8%. So unemployment rate came in a little bit higher than expected, and less jobs were added in the month of April than expected. So what's this mean? Well, one of the implications was that the expectations for the Fed to cut in September increased. If we take a look at these odds, these are based on federal fund rate futures contracts, so investors buying and selling to speculate on what the Fed is going to do in the future. If you look at the probabilities based off these transactions, you can see that 34% of participants believe the Fed is going to remain at that 5.25 to 5.5% Fed funds target range by the month of September at the September 18th Fed meeting. What's that mean? That means 65% probability that they believe the Fed is going to cut at least one time in September. If you look at those odds throughout the year, right now they're expecting two rate cuts with that first in September. That level of accommodation has increased relative to a few weeks ago when more and more people were starting to talk about that no rate cut to maybe only one rate cut by the end of the year. This lackluster jobs data, it's not so poor that everybody's worried about a recession right now, but that slowing in the economy is having some participants say the Fed might be getting permission to start cutting in the coming months. Now, bond market spreads are very low right now. So US high yield bond spreads, these are not high quality investment grade. These are the riskier part of the bond market. The high yield bond spread on the chart, this line chart in front of you, this is the difference between high yield bond yields, okay, so risky bond yields, and US Treasury, which are US government bonds, so essentially risk-free bonds. The difference between those reached 3.03%. That is the lowest since June of 2021 when it was at 3.02%. You can see on the chart going back to 2014, this is near or at the lowest level that we've seen historically. You have to go all the way back to 2007. In January of 2007, these yields reached 3.0 and dipped below 3% between January and October of that year. So about 6 to 7 months, we had high yield spreads very narrow, and ultimately led to the great financial crisis where you saw those spreads spike up dramatically. So bond market's not assessing a lot of risk right now in terms of credit spread with that 3%. So you're not getting a lot of reward for the overall risk in the bond market. But that 3% yield, this has been the case. It was higher last year, but it was still relatively low. So low risk in the bond market, but something to look at, not in the near term of the next 2 to 3 months, but something to keep an eye on because you are earning so little reward in the bond market relative to history. Perhaps some concern over the next 6 to 12 months with these spreads so narrow. Now, Paris, they brought back a century-old tradition. They haven't done it for a while. Let's see how my French is sounding here. Cours de café, which is essentially an English translation, the cafe race last week, where more than 200 waiters or servers competed in a 1.2-mile race. They started at City Hall, ended at City Hall. They had a 1.2-mile loop. The rules were simple, but not easy. They had to carry, without running and without spilling, a tray loaded with a croissant, a full glass of water, and an empty coffee cup. And the race was to see who could do it the quickest without spilling and without running. The winner came in at, I think, about 13 and a half minutes. On average, it was about 20 minutes. So congratulations to that winner. All you waiters out there, if you want a shot at the title, you've got one more year for next year's to prepare and get out there to Paris. So good luck to you. And I appreciate everyone for watching, and I'll see you next time.